Hey everyone, I'm John, and you're watching Canadian Analytical. So, what I'm about to show you, or what you are seeing at the moment, is the Nigerian Treasury Bills dashboard for 2026. This is a live intelligence platform tracking how Nigeria's government borrows money in the short time, how investors are responding, and what all of it reveals about the direction of the Nigerian economy. So, I'm actually going to walk you through section by section. And I just want to tell you guys that the objective is quite simple. Yeah, so every 2 weeks, the Central Bank of Nigeria holds an auction, and it puts short-term government debt, which is the treasury bills, on the table. Investors bid, a rate gets set, and the rate tells you everything you need to know about liquidity in the banking system, confidence in the sovereign, and where interest rates are heading next. So yeah, so this dashboard captures every single one of those options from January through June 2026, more like a 13 event, and layers on top of that, the on top of the CBN parallel liquidity operations, giving you a complete real-time picture of Nigerians' short-time financial market conditions. So let me just like specify who this platform serves. So this platform is built for three groups specifically. The first group is for portfolio managers and fixed income analysts at banks, asset managers, and pension funds who need to track where rates are moving before the next auction and position accordingly. Then the second group of people, corporate treasury teams at Nigerian businesses who hold idle cash, borrow short time, or need to understand whether rates are rising or falling before making financial decisions. And third, policies watchers and macroeconomics researchers, think tanks, development finance institutions, sovereign debt analysts who follow CBN's monetary transmission and want to read the primary market as a policy signal, not just a funding mechanism. So yeah, this is an intelligent hub built for decision makers, not just for observers. So the alert at the top dashboard. This is the first thing you see when you open the dashboard is live alert banner at the very top. You can see that the latest, which is on June 22nd, 2026, CBN conduct the new open market operation auction, offers 600 billion naira, and attract 2.7 trillion naira in subscription, which is more like 1.5 times. So rates top 20% across tenors, cumulative 2026 sterilization new well above 30 trillion naira. So yeah, the source is the market force of Africa. So right now I've been able to read everything around the banner alerts, and the next thing is for us to get into the KPI cars. So yeah, directly below that are the five headlines numbers for the year so far. It shows that the government has raised up to 10.771 trillion naira through the Treasury Bills auction in 2026 alone. And the 1 year bill, the most important benchmark, is now sitting at 16.35% after June 3rd, which was the first time rate rose across all three tenors in a single auction this entire year. So that's, if you're looking at this, you see that that's really, really, significant. And we're actually going to come back to this. So yeah, the June 3rd subscription to offer ratio of 2.16 times tells you the demand is still strong. Investors put in more than double what was available, and the June 2022 22nd OMO auction attracted with 2.7 trillion in subscription. Yeah, in subscription. So which is off in subscription of a 600 billion naira offer. And the cumulative OMO's realization for the year has now crossed 30 trillion naira. So yeah, so those five numbers give you the story before you read a single chart. And so yeah, we're also going to look at the various charts respectively as we go through go through this presentation. So yeah, at the left top corner, we'll be looking at the stock rate evolution, which is more like the yield curve chart. So here we have three lines. We have the red, the amber, and the blue the blue lines. Each of them representing 1 year, 6 months, and 3 months treasury bills. So the key chart to watch here is the red one, which is the 364-day, more like the 6 month treasury bill. So from all indication here, we can see that it opened the year at 18.47%, and which is the highest rate of 2026. And then from February downwards, it falls steadily, and by May here, we can see that it touches 15, 15, yeah, it touches around yeah 50, yeah, it touches around 15.90, nearly 260 basic points lower than where it started in February of 2026. So this is more like a 5 months of 5 months of consistent rate compression, driven by one thing, and that particular factor is too much cash in the banking system, chasing too few safe instruments. So then comes June 3rd, and the red line bounces back to 16.35%, the first rate increase of the year across all three tenors at once. So that bounce back is the inflection point this dashboard was built to capture. So yeah. Next to the yield chart is the allotment bar chart, and it's currently at the right panel here. It is allotment versus offer per auction. So the allotment bars shows you something equally important. The green bars are what the CBN actually accepted. The blue line is what originally an offer what original on offer. Sorry. So you will notice the bars frequently sit above the lines. Yeah, you notice that the bars sit above the lines, meaning that the government took more than it planned. So the June 3rd is the standout, which is up to 10, which is up to 1 trillion offered, and 1.457 trillion was taken. So yeah, you can see it here more like an outlier. So yeah, the CBN used that option not just to use this option not just to roll over maturing debt, but to actively drain excess cash from the system at a higher price. So we'll also be moving to the subscription to offer ratio chart. So this is more like your demand gauge chart here. So above anything above 1.0 means that there was more than demand than supply. So this entire year, not a single option. Yeah, something to note that this entire year, not a single option has gone below 1.34 times. So the peak has been 5.25 times on March 25th. This is the peak here, and we also yeah, which means that investors try to buy 5 times more than the CBN was selling. The color code also makes it instant to read. The red bars for the most extreme demand events, amber for moderate, and blue for softer section. So yeah, so you can see it here. We also have seen the softer section of 2.16 times. This is where we have the extreme event here. So yeah, the donor chart here, which is the year-to-date allotment by shows you where the demand is concentrated. So we are currently having 8.81% of all allotment in 2006 has gone into the 1 year bill. Yeah, the 1 year bill. Yeah, the 1 year bill. So investors are overwhelmingly and choosing to lock their money in for the longest period available, because they actually want to secure today's rate before they fall further. So below that, the complete auction record table gives every. So we also have the complete auction record table here, gives you every single number from all 13 options, offer size, the total offer size, the total subscription, allotment, subscription ratio, and all the three stop rates in one scrollable view. The June 3 row is also highlighted in red. Have the June 3rd here is highlighted in red, which is because it's more like the inflection event of the year. So we are currently on the section that most dashboards don't cover. So which is the OMO operations layer. So which is the open market operation. So we are the treasury bills. We are why the treasury bill is the government borrowing to. So yeah, so we have the highest rate around 20 to 12%, 20 to 12%, sorry, 20 to 22%, see 20 to 22%. So yeah, and that's the available minutes for to banks and foreign portfolio investors. So the five cars here track the most recent open market operation section from May 21st through June 22nd to this, which is the event. Each car shows what was offered, what came in, and at what rate the CBN cleared the auction. So the June 22nd card is in red. Is In the red is the freshest data point on the entire dashboard, which is the 2.7 trillion naira of the demand rate stopping 20%, sourced directly from the market forces after published earlier on June 22nd, 2026. So we're also going to move. So on the almost subscription versus absorb, it's which contain the five most recent open market operation sections side by side. You can see the intensity of the absorptions ramping up through June. The tracker on the right is the standing deposit facility, which is standing deposit facility here. So the standing deposit facility is like the pile of cash that the banks park with the CBN overnight because they have nowhere better to put it. And at its peak in March, it hits up to 8.06 trillion. It hits 8.06 trillion naira here and in a single day. So even with all the CBN's mop-up operation, it was still up by 4.74 trillion as recently as June, 5th. June 5th here. You can see the 4.74 trillion now. So that number alone tells us why the tightening cycle has to keep going, and the system is structurally full of cash. So on the complete OMO auction log, which is 2026 for 2026, this track eight key operation from January through June 22nd. Every section, every tenor, every stop rate, and what kind of investors drove demand. And so you can see the pattern clearly. The duration preference dominates every auction. So investors want to longer the mid tenors instrument are consistently weakest performance. So the combined absorption table beneath it. This is the absorption table beneath it here. The combined absorption table beneath it. Add up everything across NTB auctions. Add up everything across NTB Nigerian Treasury Bills auctions and the OMO operation in June. So since June 3rd is the CBN has removed approximately since June 3rd the CBN has removed approximately 8.99 trillion naira from the bank system in 3 weeks. So yet the liquidity keeps coming back because 7.77 trillion naira in maturing OMO bills is flowing back in across the same month. So yeah, so that's the challenge. Liquidity keeps increasing. So we're also going to look at the June inflows. So yeah, we're currently on the June inflows breakdown. More like this is where we have the horizontal bar chart showing where the 10.9 trillion naira projected to hit the banking system this month is coming from, and the maturing OMO bills account for 7.7 trillion of it. The CBN essentially has to keep running just to stand still, and the two analysis panels at the bottom synthesize everything into plain English verdicts and what the June 2022 OMO demands, signal means why the liquidity period also keeps frustrating the tightening campaign despite the record absorption volumes. So this is the verdict here, and it states that on June 22nd OMO, what the 2.7 trillion demand signal means. So he said June 22nd OMO auction is the fifth major sterilization event in June alone, and arrives on the same day this dashboard was last updated. So with 2.7 trillion naira in subscription flooding, a 600 billion naira offer, of about 4.5 times oversubscription. The message from the market is unchanged. Nigerian banks and foreign portfolio investors remain awash with cash and are actively competing to pack it in, in the CBN instrument yield above 20%. The fact that rates are once again topping 20% on open market operation bills, signal the CBN has either held the line on its absorption pricing or marginally, firm it. So, and consistent with its stated monetary tightening pushed under the CBN Governor Cardoso. The June 22nd section followed the pattern of every major open market operation auction since May, and investor demand, particularly for longer dated instruments, significantly outstrips the offer. So this persistent duration preference, the FPI for foreign portfolio investment, and the banks are choosing to lock money in for 100 plus days at 20% plus rate, confirm that the market does not expect the CBN to cut rates soon. It is in effect a market vote of confidence in tight monetary policy continuity, through at least Q3 2026. So here also we have the liquidity period also why tightening keeps falling to drain the system. So between June 3rd and June 22nd, the CBN has absorbed approximately 8.89 trillion naira through Nigerian Treasury Bills and open market operations combined. Yet the standing deposit facility balance, which peaked at 8.06 trillion in March, was still at 4.74 trillion naira as recently as June 5th, 2026. The system is not draining because the very instrument used to drain it keep maturing and returning liquidity to the banking system. So the June projected OMO maturity alone stand at 7.7 trillion naira, meaning the CBN must absorb near that volume just to stay neutral, let alone tighten further. So the June 22nd option viewed alongside the Nigerian Treasury bill rate hike of June 3rd revealed the CBN evolving strategy to raise borrowing costs on both NTBs and OMOs, simultaneously extend maturities of new issuance to delay liquidity reinjection and signal to the market that the rate floor has been reached. The combined effect, which is the Treasury bill reprice upward, OMO rate holding about 20% rate, a unified signal that the sovereign short-term yield in Nigeria have entered a new firmer phase for H2 2026. So that's it. The Nigerian money market in 2026 is being shaped by two forces in constant tension, which is the government repricing its borrowing costs upward after months of compression, and the banking system so full of cash that even aggressive CBN intervention cannot drain it fast enough. So this dashboard track that tension in real time, auction by auction, operation by operation. So that's whether you manage a fixed income portfolio, run a corporate treasury, or analyze a sovereign debt for a living, you always know exactly where the market stands and where it is heading. So this is Kennedy Analytical. I will translate data into intelligence. So thanks a lot for watching.